Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar starts the week on the back foot as investors digest Fed Chairman Jerome Powell's comments on Friday, which laid the groundwork for potential September rate cuts. Powell indicated that a rate cut is likely next month due to the cooling inflation and a stable labour market, but emphasised that the future action depends on the economic data and risks. Predictions for the size of the rate cut vary, with some expecting a 50 basis point reduction in September, while others foresee a 25 basis point cut in September, November and December. Meanwhile, in other key events, we get the Australian CPI year-on-year data release and retail sales, while in the US we get the Q2 GDP and the build-up to Friday's highly anticipated personal consumption expenditure, or the PCE data for July. The Fed's preferred inflation gauge may prove further insights into the direction of the policy easing when the central bank meets in September. So looking at the technicals, the market has staged a modest pullback from 68 cents, but finding support around the region of 67.60. Bargain hunters no doubt are looking beneath there, with 67.10.15 as a potential hold, and a break above 68.40 could see further gains on to 69 cents to 70. Turning to the euro, the market stages a modest pullback as the divergence kicks in, and an overheated ADX does suggest maybe further potential to profit taking and pulling back towards the region of 110.45 to 110.85. As the dollar index, which measures the greenback strength against a basket of 6 major currencies, remains around the 13-month low of 100.8085. However, if the pullback is shallow and we see a break above 112.15, that may lead on to 112.70 to 113.5, given the fact that the RSI hasn't fully broken down and still holds to a bullish bias. It was a slightly weaker performance for Japanese yen as the rebound close to the bottom side of that range around 142 emerges. Nevertheless, I still feel that beyond 145 could see a round of supply, and therefore look back towards the call of 142 and reassess from there, as a breakthrough there could see further risk to the downside and little in terms of support until around 136. Moving on to sterling, also saw a little bit of profit taking as the market pulled back below the 132.2040 resistance at the start of the week, as profit taking appears to have emerged after the 7-day rally that drove the prices to a 29-month high. Nevertheless, the bulls are still likely to stage a return, with 131 seen as a potential base, and look towards that of 132.40 and on to 133.5. Wrapping up with commodities, we've got quite a tight range forming here that may see a bounce off the level around 2,486 to 92 and eventually clear the topside level around 2,526 to 32. If so, that would see a rally on to 2,547 to 54. In the broader call though, keep an eye on these technicals. If they break down further, then the support might be taken out at 2,446 and see a drop to 2,470 before the bounce. Into the third consecutive day, West Texas is still relatively bullish as it looks towards that topside level around $75 to $76 a barrel, with the broader key level at 77.80 to 78.80 as a near-term cap. A rejection from that topside may see a pullback, but still likely to appear locked in this 72.5 to around 76.5 range. But overall, though, the market is not going anywhere in a hurry and therefore likely to be confined within this broader range as mentioned. Well, that's a wrap. Thank you for joining me. And as always, look, have an intraday report. I hope you enjoy the great start to the day.